Good evening, this is Nick Inman from VolumeProfileTrader.com on Tuesday, November 22nd. And look, the markets continued to be weak, and we're stuck in this balance range where yesterday's yesterday's high has been the top of the range, and today's low is the lower end of the range. And this afternoon, at the very end of the day, there was news coming out saying that some U.S. banks will be stress tests based off of Europe exposure. So it's something that we have to look out for more potential downside. The market didn't react favorably to that, and you can see we had a breakdown at the end of the day, and it gives us a little bit of a different picture than what is shown in the chart that I'm going to show you on the S&P, just due to when the news came out and based off of the chart I show you on when that closed. So we're looking at the volume profile chart here of the last 2 days, and you can see the point of control is at this 1190 level on the S&P futures contract, which trades a few points below the actual S&P. So we have value area low at 1184 and value area high at 1193, and our two main points are, let's call it 1198 on the upside and 1180 on the downside. And until we move either way in either direction, it's a do nothing market, and there's no reason to continue. Like, for example, if you think there's going to be more market upside, there's no real reason to continue to pile into the S&P to the long side, because if it starts to break lower, you're just going to lose more money. So stay poised and be aware that the market could continue to go down despite the fact that we are at a major support level. So let's show you what's going on in the bigger time frame. So as you can see on the daily time frame, we are still at support. We are still holding support, but it's not giving us the bounce that we were looking for. So we've had 5 days of selling pressure, and as markets ebb and flow, other than this huge downdraft, which was met by a nice bounce, markets go down and markets go up. So as we continue to sell off and have down days, there will come a magical moment where we'll have a nice pop. Now, whether it's at these levels, which we're defining as a potential support level, we're not really sure, but we are at a level where we should be holding. So we are prepared to be buyers. I've bought a little bit, and I've also scaled out a little bit in terms of expecting a bounce. I was expecting a bounce yesterday, more of a bounce. I was expecting a follow through to the upside today. We're not getting it. So what does that mean? To manage your risk, you should be close to flat and holding a lot of cash in your account right now. And if you're not, that's fine. You could be a long-term investor, really looking for 3 to 5 years, whatever, of exposure. And you just have to realize that that's your time frame, and these little gyrations in the market shouldn't be affecting your strategy. But if you're looking for opportunities basically on a month-to-month basis, then you're waiting for a bounce here, and until we get some buyers into this market, it's just a sit on your hands and wait approach. But one thing to note is the NASDAQ performed relatively well today with a few names, so let's check out that. Okay, the NASDAQ, what it did today was it defined our risk, and really today we had an inside day relative to yesterday, but we defined our risk, and we can see that today's low was higher than yesterday's low, but today's high was lower than yesterday's high. So this could be one of those patterns where we just get a little triangle effect, and we get a breakout one way or the other. But we are against the value area low, where we've had some great opportunities to get long all this year. And if you exclude this mess, which still ended up being a buying opportunity, it looks like the buyers should control this one. And the most important thing is our risk is defined under yesterday's low. So let's check out a few names. Oh, and as far as a target for the NASDAQ, we're looking for a gap close from Friday and Monday's gap. And so the 1260 to 2300 level, I'm sorry, not 1260, 2260 to 2300, ultimately up to the 2340 level. And I would be impressed if this thing got back up to 2400. So let's look at a few names like Apple and Amazon. Apple is bouncing off of this value area low relative to this balance range, and we had a nice bounce today, and Apple definitely outperformed the rest of the market, up 2% today, $7.50. But what did Apple accomplish today? It closed its gap from Friday to Monday, and we're looking for more upside. But as we go higher, there is this group of people that just want their money back. So that Apple should be met by selling pressure, regardless of the levels that it's at. Now, what's going to be important is if Apple can aggressively move higher, then rather than the sellers who just want their money back from being long, the shorts who have shorted Apple are going to be aggressively covering their position, which should spur a nice move in Apple, another $15 of potential upside, maybe even more. So the important thing is you can define your risk by setting a stop below yesterday's intraday low, or you could even put it below 370, which is below today's intraday low, but basically around where Apple closed yesterday. So Apple looks good for a short-term trade to the upside, but unfortunately, just like the rest of the market, it could be any news out of Europe, super committee deadline tomorrow. It could rock the market, which could, rising tides lifts all boats, and that could take Apple down or up with it. So just keep it on your radar. And if you're long from these levels, from this 370 level, then you're right, and you stay long until Apple tells you to sell, which is basically when it starts to roll over again. Okay, let's look at American Electric Power, and this is a dividend player, 5% yield. And what we're looking at here is it's at its point of control around 37.50, closed right there. And this isn't, if you're looking for yield on a slow mover, this isn't a bad name to get involved with right now. And as American Electric and any yield, any stock that pays a dividend, as the name goes lower, the yield goes higher. So if we can get this name, if we can start scaling in small at this 37.50 level and ultimately build a cost basis between 36 and 37.50, I think you'll be okay. And remember that basically the dividend yield that companies like American Electric and take any dividend payer as it's like an underlying bid to the market. It's like a put built into the name. So this could be a good one. It's a place to hide and to get a pretty good yield while waiting for the market to give you some sense of clarification. One thing that I like to do on names like American Electric, which pay nice dividends, is to sell at the money puts, and then if you put the name, then basically sell the at the money call for the next month. So if you're familiar with options and understand that, then that may make sense for you. If you don't, then stick to just accumulating the stock on weakness and know these price levels. Okay, Amazon. Amazon had a nice bounce today on pretty good volume. Not as good as yesterday in terms of volume, but we had a low today, an intraday low relative to yesterday, a nice bounce off the point of control for the year, and we made a new high relative to yesterday's, but we closed lower than yesterday's open. So that's something to be aware of. But for a short-term bounce, this thing looks good for at least $200 and maybe even back up to the 210, 215 level. But just like Apple and a lot of other names, you have your I want my money back crowd, and it's just something that you have to be aware of. There could be a lot of selling pressure into this name, but for a short-term bounce, this looks pretty good. Okay, American Express. This is a name that's had some pretty wild swings, but overall it's been constructive. And what we're looking at now is some short-term support at this point of control for the year, where you can see has been a pretty big pivot point in the market, in this name. And if we're looking for a bounce in American Express and the overall market, you can place your stop right under these two lows that we've had over the past couple of days, with expectations of a move up to the 48 to 50 level and maybe even into the low 50s. But it's one thing to be aware of is, just like this, the point of control has been resistance like it was back in early 2011, and even a nice breakout level, consolidation to breakout. It could overshoot, and if you have your stop too tight, you could be stopped out. So if you're looking for a bounce, basically of American Express, and you think these are the lows, there's no reason to have your stop lower than this, basically lower than $45. But be aware, given the market volatility, this could overshoot and it could come back down to this 43 level. But likewise, there's no reason to hold American Express at this $46 level, which would be your cost basis, if it's just going to drop another 6% to the downside down to the 43 level, where you can be a buyer at the value area low. So if you want to scale in and you're fine holding, basically for a move back down to the value area at 43, that's fine. But realize that you're going to incur some unrealized losses, but they are actual losses. So this looks like a decent name for a potential upside. The credit cards have been performing well relative to the rest of the market, but just realize where your levels are. Let's cover Cisco. Cisco was a name that had a nice breakout from this $15, $16 base, and which was the $15 level is the value area low for the year. And now we're trading right above the point of control, failed at the value area, but it's gone from the value area low to the value area high. So that's what you expect. And now we're back around the point of control, around 17.5. So if this is a name you want to get involved with, which has been hammered, it was up in the mid-20s, last year, the beginning of 2010, and it was basically cut in half, and now we're retracing some of that. So if you want to be involved in this name, having a stop below 17 or 17.5 isn't a bad idea. Likewise with American Electric, this is a name that you could sell at the money puts, and then if you're put the stock, selling at the money calls, and it gives you an income stream and basically some decent returns on a stock that doesn't move a whole lot. I need to cover DDI Corp because we've been talking about this. You should have, if you were long this name, you should have been stopped out for a small loss today. And we're seeing the result of this consolidation pattern, and it's breaking down. It's similar to what the market did last week. So, if you're long this name, like I bought on Friday, that was clearly wrong. But that's okay. That's trading, and you take a small loss and you move on. Ford looks like a decent opportunity right here. We've had a pretty good 2 days after this pretty big sell-off. We're below the value area low for the year, so that's discouraging, but we are at good support at this $10 level, and that's the reason why I have this skinny blue line. So if you want to be long forward, you place a stop under yesterday's intraday low for a bounce up to the value area around $10.75, $11. Just realize that there is a lot of pain in this stock. So you're playing a turnaround, and you're basically saying that this $10 level is going to hold. If it doesn't, then I'm sure we're going to go right back down to $9 or lower. Okay, silver, I didn't cover it yesterday, and I'm sorry. I was talking about a couple of days ago, I don't remember what day it was, saying that I would rather be a buyer of silver around $30 or $29 rather than $31 or $32. And the reason why was because it was closer to the value area low, and I could incur less risk with a higher potential of reward. And today we've had a nice 2-day move on silver SLV. We've gone from $30, which was basically the low yesterday, up to $32. So a 6% move in 2 days isn't bad. And the only thing now is we are stuck in a box. We have not breached. Let's see. It looks like it was Thursday's intraday high, and that's fine. We're stuck in this box. We're looking for a move back into the $33, $34 range, but I would be a seller in that range. So if you've been long, if you bought silver yesterday, you're a winner, but just realize that you are at the top of the current range, and it may be smart to take some profits. Now, NVIDIA, this is a name that continues to perform to the upside, and we're seeing a potential breakout candidate with a target up towards that 17 to 19 zone, and we're looking for, as it was up, I think it's up over 8% in the past 2 days, but it's not smart to buy right now, only because we are at that point of control, which has been resistance really for the last couple of months. And realize your downside risk is right below $13.50, which was yesterday's intraday low. And you don't want to be piling in $1.50 above where your stop should be on a $15 stock. So although this looks like it's a breakout candidate, if it's not, and you pile in at these levels, you're going to be regretting this, because it would ultimately come back down to $13.50, and you'll be upset because you have $1.50 worth of risk on every one share that you own. So if you want to be a part of this name on a potential breakout to the upside, buy a quarter of a position. And if there's weakness, then scale in some more. Just make your risk in dollar terms where it's satisfying. If this name doesn't work out and we drop below $13.50, you're still okay with the loss. Okay, Sirius XM radio. This kind of looks like NVIDIA. We've had a base around, call it $1.65, and we had a big downdraft, which was rejected, and we consolidated, and now we're getting a breakout above resistance. If this is a name you want to be a part of, it's made a 15% move off these recent lows, but you could get involved and have a stop below $1.70. And you may be like, Nick, why would you have a stop below $1.70? Where on NVIDIA, we're talking about having a stop under the recent lows. And the reason why is because this is a potential, this is breaking out from this downtrend resistance line. And if it's breaking out, we're expecting more upside. Therefore, if we do test, come back and test this breakout level, why would we want to have a stop way down at this $1.60 level when we're expecting this breakout level to hold and give us a higher low to the upside? So therefore, we can keep it right below the point of control and these 3 moving averages and be satisfied with the risk incurred there rather than another 10 cents of downside risk. But as far as an upside target on Sirius, you could even make the argument that we have an inverse head and shoulders pattern. We have our left shoulder, our head, and our right shoulder. And the measured move would be from let's get the exact measure move. Let's call it $1.27 to, let's call it $1.87. So 60 cents upside, which would pretty much put us back at the highs for 2011. So $2.20 to do $2.50 is your target for Sirius on the upside. Now gold, we got a nice bounce in gold, just like we did in silver, though silver outpaced gold to the upside. We're getting a bounce off this value area high for the year. It's also the point of control for this range where we saw the nice breakout, the test back, and a continuation. Unfortunately, we're stuck in a range right now with gold being our lows from yesterday, the downside, and our upside's 175. So if you're trading gold, then you put a stop. If you're trading from the long side, you put a stop below yesterday's intraday low. And if you want to short gold, you wait for more upside and you put a stop above 175 or these recent highs. But you can see gold is still making higher highs and higher lows. And sure, we have a lower high here, but this looks like more of a consolidation zone. And we're, just like any name, which I can bring to an example right here. We had a consolidation period and then a move higher. The only thing that's different is this is much more volatile. So it still makes sense to be a buyer of gold on weakness, especially with defined risk like we have right now. Just realize that, this could be ugly for gold and we could get more downside, but it's hard to go away from the 10-year uptrend that we've experienced and to call this the top. It's just something tough. Now the VIX it had a down day, down nearly 3% on a market that struggled, and it's still above that $31 level, which has been a pivot point for the VIX. But if we start to break below that level, then it's going to be encouraging for the market for upside. And we're looking for maybe not so much upside in the overall market, but more stability. But what it would be good for is for shorting the VXX, which is the VIX ETF, which is a flawed instrument, which when it's based off of, the VIX futures, and just like the USO, when people roll out of that front month of the VIX, the VXX tends to get crushed. So let's show that real quick. Okay, I brought the VXX down to an intraday chart just so you can see what's going on. But we're failing. This is the value area high for not for the year, but for this recent period of turbulence in the VXX where it's been at elevated levels. And we're seeing a little bit of rejection from those levels. And you can even make the argument that we are seeing a bearish wedge pattern, which would be a result to the downside. And we have a point of control on the VXX around 43, which, let's face it, every time it's gotten to those levels, despite this big downdraft, which ultimately recovered and held 43, it's been a level where buyers have been rewarded. So even though we're selling, or I have a position in the VXX, and I initiated today, and it's actually pretty profitable. It's VXX puts, I forget the strike, they expire in December. They're at the money though. I think it's 47 or 48, maybe even 46. But I'm looking for 43 on the downside. And if we get that, these puts are going to be very profitable. And so it's tough to say right now, but I'm looking for a resolution on this bearish wedge pattern, this potential bearish wedge pattern to the downside. But it's a little frustrating that at the end of the day, the news came out with the stress test for the banks and the market didn't act favorably to it. So it could kill this position, but it's one of my ways that I'm playing for a potential market bounce. Okay, the last name I want to cover is FXE, which is the Euro ETF, and it's in a consolidation pattern right now. And if I zoom in, you can see it's struggled against this value area. It hasn't acted positive, the only thing it's done is trade sideways. So we are looking for a bounce, some kind of retracement in the euro. And it would be up to this 137 level, which I will show you in a second what that level represents. But it's a place where we can define our risk. And if the euro goes below these recent lows, we get stopped out, no problem. But if you're short the euro, then you're hoping that this box breaks to the downside, which would ultimately bring the overall equity market with it, because wherever the euro goes, the equity market goes. So this could go either way. Just realize we are at an important level in the euro. And let's bring this to a smaller time frame to get what's going on. So that recent consolidation pattern that I drew a box around in the euro, you can see where that is. It's these levels right here. And the point of control for that level is right at this one. It's basically, well, you see, it's the purple line. And the value area low is this blue line, this 134 level. And the reason why I said 137 on the upside is because, one, it closes all of these gaps that we've seen. And two, it's the value area high for this range. So there's some potential upside in the euro, which well, it may be sold into. It should be, but you never know. But one thing that's troubling from the buyer side of the euro and the market is we've had trouble staying above this point of control. And you can see every time we've gotten above that level, we've really been rejected, and we've been hanging out on the lower end of that range lately, below the point of control. So it's a little troubling, but we wait and see. And with this short week, it's getting to the point where we're scaling out of positions and just going flat into the weekend and calling it an early week. Remember, the super committee deadline is tomorrow, so that may be a factor, even though we know that they got absolutely nothing accomplished. So anyways, I hope this helps. I hope it gives you a few ideas, a few trading ideas, hopefully some profitable. Obviously, not all will be, but that's the point. You manage your risk, you keep your losses small, and you try to build on your winners. So anyways, have a good night.